What does this mean? I mean, could we see authorities stepping in? I think we're at those levels that we saw the Yuan back when there was the shock devaluation in 2015.
Well, it does sound like a clear warning from the authorities, Sherry. Two things are going on, like you mentioned there. First, we had the central bank come out and remind everybody, wait a second, this isn't a one-way bet. As you mentioned, the yuan is at a 6-year high. It's the best performing emerging market currency, but maybe the PBOC is saying it's time to cool your heels a little bit. And on the other hand, then, of course, there's a committee of market participants kind of overseen by the central bank, and they've come out to remind everybody, traders and banks in China, that you've got to be very careful and watch your risk management. Be careful how you go when you're trading the currency. And I think the kind of net takeaway from it all is a clear signal that the PBOC is getting a little bit uncomfortable with where it's heading now. We know China's exports are booming, but of course the economy is slowing. I think the question becomes whether or not we move beyond the jawboning. The PBOC is certainly not the only central bank in the world that makes commentary on their currency, but whether we move beyond jawboning and into something else, and if the authorities do perhaps pull some levers to take some deliberate pressure out of the yuan. It doesn't seem to be that we're there yet, but certainly authorities are watching this, and it probably will become more topical as growth slows and you have a strong currency. That's typically not a great mix.
And of course, we have the loan prime rate today as well. We're not expecting a change for November. This isn't going to be the first policy tool they will reach for, right?
No, I mean, the authorities actually in China seem somewhat relaxed, even despite the fact that they're warning about slowing growth. We heard a warning of quasi-stagflation risk over the weekend from a PBOC advisor, but nonetheless they're not pressing the emergency buttons, partly because the growth rate is slowing and being compared to a much faster rate 1 year ago, so sequentially it's not as bad. And anyway, that slower momentum is probably feeding into a bigger picture for the economy, which is all about sustainable growth. We know the backstory that they're trying to contain risk and debt and leverage in the system. So nonetheless, though, to your point, the authorities are expected to put some support into the economy. They have certainly been making sure there's enough liquidity in their monthly market, in the financial system, in their monthly market operations. It's a question of what they do next. But when it comes to the central bank story, the PBOC isn't seen as being on the front line of pulling the lever firmly in either one direction or the other, Heidi.